Welcome back to the channel. I'm Algabot, and today we're taking a close, educational look at an expert advisor for MetaTrader 5 called the Trend Continuation Factor Rider. This strategy is built around the Trend Continuation Factor, an indicator introduced by MT5 and it takes a trend-following approach to the market. Over the next several minutes, you'll learn how the indicator measures the persistence of a move, how the expert advisor decides that a trend is genuinely underway, and how it manages its stop-loss and take-profit. Everything here is for educational purposes only, and it is not financial advice. Let's get started. So what does this expert advisor actually do? At its heart, the Trend Continuation Factor Rider is a trend-following system. It tries to identify when a market has stopped drifting sideways and has genuinely committed to a direction, and then it aims to ride that move. The engine behind it is the Trend Continuation Factor, or TCF. Most momentum tools simply measure how far price has traveled. The Trend Continuation Factor asks a subtler question. It rewards persistence. A run of same direction closes builds up what we can think of as continuation force, but the moment price moves the other way, that side's force is reset to zero. The core insight is that a real trend is not just net displacement, it is uninterrupted displacement. The indicator produces two legs. The positive leg, TCF+, measures net up force after penalizing any down continuation. The negative leg, TCF-, measures net down force after penalizing any up continuation. In a clean uptrend, the up moves string together, so TCF+ stays above zero while TCF- is driven below zero at the same time. A downtrend prints the exact mirror. This expert advisor is timeframe agnostic. Every reading uses whatever timeframe you attach it to, so nothing is hard-coded. In testing, it tends to be studied on Forex majors and metals on the 1-hour and 4-hour charts, where trends have room to develop, but the logic itself does not lock you to any one symbol or period. Who is this style suited for in an educational sense? It's aimed at traders who are curious about systematic, rules-based trend following and who want to understand how persistence can be measured rather than guessed. As always, remember that trading carries risk, that losing trades are a normal part of any method, and that nothing in this video is a recommendation to trade. Let's walk through the logic step by step, in plain English. The expert advisor acts once per newly closed bar, so it never reacts to an unfinished candle. For every bar, it measures the change from the previous close. A positive change is recorded as an up move and a negative change as a down move. Then it builds the continuation force. As long as price keeps rising, the up moves are added together into a growing up streak. The instant price ticks down, that up streak is reset to zero, and the downside begins to accumulate instead. A flat bar, where the close is unchanged, breaks continuation on both sides. This resetting behavior is what makes the indicator reward unbroken runs rather than choppy back and forth. Over a lookback window, whose length is set by the length parameter with a default of 12 bars, the strategy sums these components into the two legs. TCF+ is the total up force minus the accumulated down continuation. TCF- is the total down force minus the accumulated up continuation. Now the entry. The strategy detects the emergence of a continuation regime, meaning a fresh transition rather than an ongoing state. For a long, the just closed bar must show TCF+ above zero and TCF- below zero at the same time, while the previous bar did not satisfy both. That means up continuation has just switched on. For a short, the mirror must occur, with TCF- above zero and TCF+ below zero on a bar where that was not previously true. To avoid acting on weak, ambiguous flips, there's a scale-free strength gate. The dominant leg must exceed the MinStrengthAtr parameter, defaulting to 1, multiplied by the average true range. Setting this to 0 disables the gate. Risk is defined entirely from ATR. When a long is opened, the stop-loss is placed AtrStopMult times ATR below entry, defaulting to 2, and the take-profit is AtrTpMult times ATR above entry, defaulting to 3. Shorts use the same distances in reverse. Finally, if an opposite fresh signal appears, the expert advisor flips the book, closing the old side and opening the new, so the position always stays aligned with the live continuation regime. Let's read the MQL5 code the way you'd see it inside MetaEditor. At the top are the input parameters. Length is the lookback window over which the continuation force is summed, defaulting to 12. MinStrengthAtr is the strength gate, set to 1 by default, and it requires the dominant leg to clear that multiple of the average true range. ATR period, defaulting to 14, drives both the gate and the stop and target distances. AtrStopMult and AtrTpMult, defaulting to 2 and 3, set the stop and target as multiples of ATR. Lots is the position size, and magic is the tag that marks this strategy's own traits. Just below, the two Boolean flags capture the core idea. Fresh up is true when up continuation is present now but was not present on the previous bar, and fresh down is the mirror for the downside. Now look at the buy block. When fresh up is true, the code first closes any open short. Then, if it isn't already long, it reads the ask price, computes a stop loss 2 times ATR below entry and a take profit 3 times ATR above entry, and calls trade.buy. The sell block is the exact opposite. When fresh down is true, it closes any long, and if it isn't already short, it reads the bid price, sets the stop 2 times ATR above entry and the target 3 times ATR below, and calls trade.sell. Both sides are symmetric, and both define their risk before the trade is placed. Let's bring the whole strategy to life on a chart. On screen, you can see a series of candles across the top, and below them a subpanel showing the trend continuation factor. The gold line is the positive leg, which we'll call up force, and the blue line is the negative leg, the down force. The dashed line running through the middle marks 0, and that 0 line is the key reference the expert advisor watches. Look at the first few candles on the left. Price is drifting gently lower, and you can see the down force leg sitting above 0 while the up force leg sits below it. According to the strategy's own definition, that combination describes a market leaning to the downside. There is no fresh transition yet, so the expert advisor simply waits and observes. Now watch the fourth candle. Price prints a firm bullish candle, closing near its high, and something important happens in the subpanel. The gold up force leg pushes up through 0 into positive territory, and at the same moment, the blue down force leg drops below 0. On the previous bar, that pairing was not in place, so this is a fresh emergence of an up continuation regime. This is exactly the condition the strategy is designed to detect, and the buy entry marker appears on this candle. Because the dominant leg also clears the strength gate, meaning the up force is larger than 1 times the average true range, the signal is considered strong enough to act on. From here, follow the candles higher. Each new candle closes above the last. The up moves string together without interruption, and that unbroken run is precisely what the trend continuation factor rewards. The gold leg climbs further above 0 while the blue leg sinks further below it, confirming that the up continuation is holding. Price advances steadily until it reaches the take profit target, which sits a distance of 3 times the average true range above the entry. The take profit marker shows where that long trade is closed for an illustrative result. Notice that the stop loss, set 2 times the average true range below the entry, was never approached, giving this example a reward-to-risk shape of 3-2. Now the character of the market changes. A couple of candles roll over from the highs, and the subpanel starts to unwind. The gold up force leg falls back toward 0 and then dips beneath it, while the blue down force leg lifts up through 0. On the 9th candle, that mirror image completes. Down force is now positive and up force is now negative, and the bar before did not satisfy both. That is a fresh down continuation regime, and the sell entry marker appears here. If a long position had still been open, the expert advisor would flip the book, closing the long and opening the short, so the position always matches the live continuation regime. From the short entry, watch price work lower candle by candle. The down moves accumulate without a meaningful bounce. The blue down force leg extends further above 0, and the gold up force leg presses deeper below it. The strategy is riding the persistence of the decline exactly as it rode the persistence of the earlier advance. Price slides down to the short take profit target, again placed 3 times the average true range from entry, and the take profit marker closes the trade. So across this single illustration, you've seen both halves of the strategy. A fresh up continuation opened a long that ran to its target, and a fresh down continuation opened a short that ran to its target. In each case, the entry waited for the two legs of the trend continuation factor to cross zero in opposite directions on the same bar. The strength gate confirmed the move had real conviction, and the ATR-based stop and target defined the risk in advance. Of course, not every signal behaves this cleanly, and losing trades are a normal part of any approach. That brings us to the end of our look at the trend continuation factor rider. We covered how the trend continuation factor measures the persistence of a move, how its two legs red against zero, and how the expert advisor enters on the fresh emergence of a continuation regime while filtering weak flips with an ATR-based strength gate. We also saw how it defines its stop loss and take profit from the average true range, and how opposite signals flip the position. Remember, this video is educational content only, and it is not financial advice, a recommendation, or a solicitation to trade. If you found this helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with the strategy you'd like us to break down next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.